In this episode of Investors and Operators, I am chatting with Max Taylor, who is managing director at Novastone, which is an operator led buyout fund. This is going to be an interesting episode. Everyone from LPs who are interested in the model to the seasoned operator, that seasoned industry executive who is interested at what this could be, and everywhere in between. So, Max, thanks for coming on. I would love to hear just the overview of the firm. Like, how did it get started? And then we can kind of go into, what the business model is like. But I'd love to hear a little bit of background on the firm.
Yeah, thanks so much for having me on, Jordan. Huge fan of the pod. It's nice to be in this seat. Really appreciate you taking the time. So, Novastone was founded out of this notion that the lower middle market in particular is facing a massive succession wave. Some people call it the silver tsunami. There's other sort of cute terminology for it, but the fact is that right over 50% of small business owners in this country are facing retirement age in the near 10, 15-year time horizon. So Novastone was developed to be the optimal solution to succession in a market where traditional private equity doesn't necessarily lend itself well to solving succession. And some of the other strategies like search funds, solopreneurs out there buying businesses may or may not be well suited for a larger sized organization. So the founder of Novastone used to actually sit in the CIO seat of a family office, started seeing really interesting search fund deals coming through his group. Loved the concept, really liked the notion that somebody could be the next generation leader of these companies. And that was something that was very appealing to him. His family actually had entrepreneurship in his family, and unfortunately, his grandfather died in the CEO seat with no successor in place. So he lived it as a life experience, and it gave him this interesting perspective that it was a solution that really needed to be solved. As he was looking at the search fund space in particular, he noticed that the vast majority of searchers were fresh out of MBA, super smart, super driven, passionate people, but may or may not be the best fit to actually solve the succession for a company that's, maybe 20, 30, 40 million dollars in enterprise value, has maybe 75, 100 employees. Somebody fresh out of school that hasn't had that operating expertise is going to have to build the plane as they fly it. So his aha moment was, well, why don't we merge the lower middle market buyout strategy that's been tried and true for the last 30 years and creating, really massive value, particularly in the lower and mid markets, with this sort of innovative search model. So that's how Novastone got started. Let's take these two successful notions and put them together in such a way as to specifically get at solving that succession issue.
Walk me through the typical persona of the operator that you're going to be back in. What's their, where are they at in life and their career, and why is this particular model interesting for them?
Yeah, it's a great question. We think of these folks as mid-career operators. You could picture somebody in their mid 40s to mid 50s. They've had a successful career and track record, usually in a specific industry for the last 20 plus years. And by and large, they've been a CEO or high up leader in the past, but they may not have gotten the economics that they would have liked to. They've created lots of value. Maybe they got a great cash bonus out of the deal, but they didn't really feel like an owner in the way that they maybe deserved. And so that is our target demographic because we feel that first off, they're folks that have been there, done that. This isn't an aspirational career goal for them. This is a way for them to really capitalize on their deep industry expertise and knowledge in a way that's a little bit different. We find that when this person that's been in a specific industry for 20 or so years goes out and actually starts searching for a business, because that's ultimately what they're there to do, the relationship that gets built with the seller in the outset is really interesting. They're having a peer-to-peer conversation really, really early on, and it provides a lot of comfort in the eyes of the seller that they're talking to somebody that really could be the next steward of their business, as opposed to someone who maybe has less experience or maybe has sort of more of a financial buyer aura to them.
how many operators have you backed?
So up until this point, it's almost 75 operators that we've backed since 2020.
Wow. And then of those 75 operators, what do you think is like the rough percentage of operators who really understand their industry? They're on the exec team, but they've never done a deal, and the ones who understand the industry and they have done a deal. Like, how do you think that kind of generally breaks down?
Yeah, it's a good question. I'm not sure if I could answer with specific percentages, but what I'll say is that most of the folks that we've backed have been in the CEO seat before, whether it was that they started their own business or they were a hired gun for a family owned business or something along those lines. That tends to be the vast majority of the folks that we're backing. They tend not to be aspirational in terms of their leadership. We have had folks that have maybe been the chief operating officer and would like to be the chief executive officer, but by and large, they've really had P&L ownership over the past
Yeah.
decade of their career.
What's the typical size and shape of these companies that they're buying? Like, uh, how many successful acquisitions have there been of platform investments? And what do you think is like the average EBITDA, the average enterprise value of these
Yeah, so
deals?
yeah, it's a great question. So to date, we've done 24 of these transactions, and they range in size between, say, 3 million or 2.5 million in EBITDA on the low end and 7 million in EBITDA on the high end, roughly translating to a 15 to 40 million dollar in enterprise value. And we see that as the interesting area of the market for us as an organization to play in. What we find is that once you get over 40 or 50 million in enterprise value, most of the lower middle market buyout strategies that have been tried and true for the last 20 or so years are still great buyers for those businesses. But they usually rely on existing management in place or to parachute in a CEO after the fact to really solve that succession issue. And we find sub 50 million in enterprise value, it's just a little bit more difficult to make the math work in those traditional models. On the other end of the spectrum, we find that traditional search fund, while it's been quite successful over the years, tends to cap out at about $20 million in enterprise value. Our feeling is that's a direct result of the sort of less experienced operator component. Again, super smart, super capable. They'll be amazing operators throughout their career, but that 28-year-old fresh out of business school may or may not be the best fit for a much more mature organization.
Yeah. So walk me through like a sample deal structure. If it's, for example, a $40 million deal, and we're going to use half in debt and then the other half in equity, who's providing the equity? How much does that operator, usually contribute to that size of a deal, would you say?
That's a great question. So many of our operators will contribute capital to their own deals, but some of them are not in a position to, put any meaningful amount of capital into a deal. It's not a sourcing criteria for us that they have their own capital to put in. We're solving for who's the best operator, regardless of their financial status and whether they could actually participate. So the way in which we do it is we syndicate these deals on a deal by deal basis with a variety of different sources of capital. They could be high net worth individuals, small family offices, funds of search funds have seen our model as interesting because we can do this at a little bit more scale than other groups typically can. But that's the makeup of the capital stack. Now, what's interesting for the operator is that they get the opportunity to earn up to 20% equity in the business if they achieve certain IRR metrics to investors. So the incentive alignment is second to none in terms of these operators wanting to grow these businesses and get them to a successful exit because it allows them to gain really meaningful ownership in these businesses. And ultimately, we see that as a key differentiator for these really high caliber operators that, you know, may not have had this opportunity to, quite frankly, create generational wealth for themselves and their families.
So how does that compare to the search fund model where searchers are getting up to what, 25 or 30% equity? So like, and they're also getting salary for the search fund while they're looking for a business. Like, if you can contrast your model to the typical search fund model.
Yeah, it's a good question. So search fund model does tend to offer a higher equity, but it's usually in a smaller pie. So the companies that we're targeting are larger and tend to have an opportunity to have the same amount of growth as a search fund deal, but it's starting from a larger point in the beginning. So there's that piece of it. Our group is also really designed programmatically to ensure the success of our operators. We have over 45 people working full time in Novastone. That's not including the operators themselves. So this is all a group designed to ensure that we find the best possible opportunities, we underwrite the best possible opportunities, and we ensure that the companies that get acquired ultimately grow to a successful exit. So it's an enormous amount of support that goes much far beyond, you know, the capital invested and the board seat and advice here and there. It's a really fully baked out program.
How big do you think are the average search fund deals in enterprise value and versus this average size of your deals?
Well, so I'm sure someone will dig through the Stanford study and maybe correct me if I'm wrong on this, but we tend to think that the search fund deals on average tend to cap out around 15 to 20 million in enterprise value, and that's where our beginning point is. And we tend to cap out at around the 40 million in enterprise value, and we see that as the beginning point for the traditional lower middle market. So, as
Okay.
an organization, our goal is to effectively transition these what our founder owned businesses by and large to the point where they can be a hugely successful platform for the rest of the lower middle market. We're really that transition from, you know, small mom and pop need some professionalization to the lower middle market.
So how does this actually work? Let's say, I am a 46-year-old who has been in the adhesives space for the past 20 plus years. And I'm like, this is interesting. What's next?
Yeah, great question. Well, if you came through our process, what you'd find is a very interesting and compelling, usually LinkedIn post offering a CEO position at a company in your local market. And as you go through the process of applying to Novastone to figure out whether or not you're a good fit as an operator, you spend 3 to 4 months with our team working through a thesis that is specific to your space. So if you're an adhesives veteran, we're going to want to understand from your perspective what it is you feel the low hanging fruit opportunity is within the adhesive space. Why are you excited to for the next 10 years of your career, operate an adhesives manufacturer in XYZ location? And so for us, that process of getting to know our operators is really around getting to understand how they think about their own individual space. For us as investors, what makes it really interesting is it allows us as an organization to have a lot of wide width and aperture in terms of what we can invest in because we have a lot of depth and expertise at the individual operator level. And so we really qualify for, are these the best and brightest folks within their specific industry? And do they have a compelling and exciting reason for wanting to stay in that industry and take a really big swing?
During those 3 months, do I quit my job that I've been in for 20 years? Or that and then I join you during an accelerated period and I get paid salary or like how does this actually work?
Yeah, so it depends. Everybody's situation's a little bit different. We see people coming to us who've just had an exit. Maybe they've just finished their non-compete and they're looking because they thought retirement wasn't for them and they're still excited to work. And others are in the process of transitioning out of their current role. We do in the first part of our process look relatively similar to a search fund in the sense that they come on board with us, they sign up for a 2-year search period, they get paid a salary during that period. All of that, sort of cost of the search gets rolled into the deal very similarly to a search group. But what's different is that, and I mentioned this a little bit, that dedicated team of M&A professionals and folks that are really going to actually take the lead on helping them diligence and evaluate a deal is a lot more involved than, them really running through it and then asking the investors after the fact.
So what like what's the salary range of people who join?
It's a right around 150,000 a year. Depends a
Okay.
little bit, but it's not enough to really necessarily get comfortable. But we also recognize that to get the best and the brightest in the mid careers, they have responsibilities, they have families. There needs to be some sort of compensation for what is a grueling full time job. I mean, the search is a very difficult phase of this program.
Why w so why do you guys have this model that almost incubates the independent sponsor versus someone just doing their own independent sponsor model? Is that the typical industry operator just doesn't have access to capital and the other resources to do the deal?
It's a good question. The way I would frame it is that not everybody knows really what a search fund is in that sort of purebred operator world. You know, 25 years ago when they were going through business school, it certainly wasn't as hot of a topic as it is today. And so part of it is we see this in our operators that they maybe know what a search fund is, but they wouldn't have necessarily raised their hand and said, "Hey, I'd like to raise a search fund and go buy a business." They might know, "Hey, I'd like to run a business. I'd like to be CEO." They may even say, "Hey, I'd like to buy a business, but I don't really know how I'm going to actually execute that all on my own." And for any of those scenarios, we're a really excellent fit. I think one of the challenges with the traditional search fund industry is you ultimately, as an investor, are having to wait for somebody to raise their hand and say, "Hey, I'm raising a search fund." And the question is that the person that's the best fit operator or not? And so you really have to go through a lot of those folks to figure out who the cream of the crop is. From where we sit, we take an intentional approach at recruiting the best operators first and foremost. So in that way, we look a little bit more like a private equity shop that's making partnerships with operating partners, but we're doing it within that search lens.
And how does the equity work? So you're saying up to 20%. Is it, like, how does that actually work in terms of, at investment, over time, et cetera?
Yeah. So at investment, the equity is 10%. And throughout the course of the investment, based on IRR milestones, they can achieve up to 20%. And so the idea is that, we're all owners here in this deal, and we want them to feel ownership from day one and make decisions based on the fact that they're an owner. But we also want to provide a lot of upside if the targets are hit. And so from an incentive alignment perspective, it works out really well.
During the search phase, for that 12 plus months, what what is the operator getting from you to assist with that search?
Yeah, it's a great question. So the first piece of it is help with, transitioning from their career to this new world of searching. And again, we've really qualified them for being great operators. We haven't necessarily said, "Hey, are these M&A folks? Have they done tons of deals?" Some of them have, some of them haven't. But the point is transitioning to a daily routine of actively going out there and trying to uncover opportunities, whether it's with having conversations with intermediaries or, pounding your existing network. It takes a little bit of a transitional period to get that up and running. And our team's really good at the initial sort of phase of transitioning over. Beyond that, we have a whole team that works on the data in the back end to try to help landscape out the industry, help figure out which intermediaries, both regional and specialists, might be the best to have conversations with, as well as help them with their own messaging and thinking about, well, how are you presenting yourself as an operator searcher to the broader community? How do you convince somebody to take a meeting with you and have a conversation? And so it's a lot of support around that aspect. Once the search phase has sort of gotten going and they're actually bringing opportunities, now they have a whole team of investment professionals that they rely on. They get paired with a senior associate that's going to go through a deal with them and say, "Hey, does this make sense? Is this the right kind of deal that I should be looking at? And if so, how would we structure the LOI? How would we think through the price? How would we think through the risk factors and how to mitigate them? What questions should we be asking in due diligence?" All of those sort of things that sort of become second nature to us as investors are somewhat new to the operator. So we rely really heavily on our investment team for helping them through that process.
Can you talk about kind of how this contrasts to uh, larger funded private equity firms that are pursuing a similar strategy and reach out to operators where they might be at fund three, four, or five, and also have a specific industry thesis. Um, how does your experience kind of compare to that fund three or fund four person who's also going after operators?
Yeah, it's a great question. I think that in terms of how do we compete on a deal by deal basis, we find that we're not really competing with traditional lower middle market private equity as much because we're specifically targeting deals with a succession issue sub 50 million, and that operating partner model tends not to align as well with that strategy. In terms of competing for our operators, versus their operators, what we're finding is that, you know, that is a model for them, is to go work with a more established group that's industry specific. However, there's less of an ownership role there. There's less of an opportunity to make real meaningful equity in those deals. Now, some of them are much, much larger. And so that's a question of, does the operator's experience line up? If they've run 1,000 person organization and that's the target that their fourth fund group is going after, they may be a better fit for that. But if they really had their bread and butter in the lower end of the lower middle market, that sub 100 person company, that's where we're probably a more meaningful opportunity for them to earn equity.
Maybe the last question is when these operators have friction points along their deals? I mean, because you said that there were what, something like 75 plus that have been backed in 24, 25 acquisitions. Like when the operators don't successfully acquire, like are there any common themes on why that happens?
It's a good question, and I'll say we still have 30 active operators right now, so we're
Okay,
holding
so like
about a
24 successfully acquired and
correct.
then 30 actively.
Yes.
Okay.
Yeah.
Okay.
So the reasons are all over the map. We've seen some where maybe the thesis and the strategy in the market was a little bit off. Maybe there wasn't as big of an opportunity or market size set for a super niche, hyper focused player. There could have been issues with, just a misalignment of whether this is what they really wanted to do. Um, it's challenging, right? Search is hard. Finding good deals is difficult and it's a grind. And I think it differs from the day to day of being a purebred operator. And so I think some people have simply felt that it wasn't for them ultimately, after a couple of failed LOIs or
Yeah.
whatever the case may be. And so we recognize that, again, you're going to be operating for 10 years. You're only going to be searching for maybe a year to 2 years. So, in a large way, it's sort of a drop in the bucket of the overall career, but it's one of the most challenging pieces of it, particularly for folks that have been kind of comfortable operating for the last 20 years.
Yeah. Cool. All right. Well, we covered a lot of ground in this episode. I think this is a super interesting model, and a lot of seasoned operators are kind of looking for um, how they can have a larger part of what they've been working so hard on. And I think this is a super interesting model. What's a good way for people to reach out to you to learn more?
Yeah, thanks so much, Jordan. I'm relatively active on LinkedIn if people want to look me up. Also, shoot me an email, mt@novastonepartners.com. Love to have a conversation. If you're an operator and looking to join our program, I can put you in touch with the right people. And I'm always happy to chat about the model. I'm excited by it. I think it's a nuanced strategy and a very interesting time in the market.
Awesome. All right. Thanks so much.
Thanks, Jordan.